of the market yesterday. Those that have been deeper into understanding and one the one share price appreciation closing at 4,457 Ugandan shillings per share. Let's not forget that as of yesterday's analysis, East African Breweries was among the losers on both the Uganda Securities Exchange and the Nairobi Securities Exchange. So it just goes to show you how volatile these markets are and how fast they react to political and financial environments. But closely followed was National Insurance Corporation with a 7.33 share price appreciation. We're looking at the share price being at 6 Ugandan shillings as of yesterday. Nation Media Group also went up by 0.58%, and they are currently at 539.83 Ugandan shillings per share. Now, Jubilee Holdings also followed closely with 0.45 share price appreciation, closing at 5,252.40 Ugandan shillings per share. KCB Group also went up by 0.33%, and it closed at 996.50 Ugandan shillings. MTN Uganda is at 170.20 Ugandan shillings, and it went up by 0.12 as of in comparison to the previous trading session. Now, just to understand, yesterday we went through East African Breweries and understood how it came to be and when it was listed, and today we want to look into National Insurance Corporation, because it followed closely with an appreciation of 7.33% share price appreciation. But just for context, it is listed on the Uganda Securities Exchange under the ticker symbol NIC, and more information on the International Securities Identification Number could be found on the company's website. But it boasts shares outstanding of 2.12 billion Ugandan shillings, 2.12 billion, and a market capitalization of 12.7 billion Ugandan shillings. Now, the current share price of National Insurance Corporation is 6 Ugandan shillings per share, and it closed the last trading session at this very 6, and that was on the Uganda Securities Exchange. This was recording a 7.3% gain over its previous closing price of 5.59 Ugandan shillings. So NIC actually began the year with a share price of 6.50 Ugandan shillings, and has since lost 7.69% off of that price valuation. This was actually ranking it the 16th on the Uganda Securities Exchange in terms of year-to-date performance. But NIC is the 6th most traded stock on the Uganda Securities Exchange, and that has been so over the past 3 months. We're talking from around March 15th to about June 24th, 2024. And NIC NIC has actually traded a total of 363,044 shares valued at about 2.18 million Ugandan shillings, and that was over the period. We're looking at an average of 5,763 traded shares per session, and a volume high of 166,400 was achieved on April 12th of the same period. Now, just for context, we're looking at a volume of 900 in the previous trading session alone, but as you go further into an analysis of the National Insurance Corporation's performance, we didn't see any movement actually from around March, and right after that, we saw declines all the way through the start of June. But while June was beginning, we saw an appreciation of about 9.09, and that was a change of 0.50 that quite literally saved the stock. But in other gainers, we are looking at the company that came right after National Insurance Corporation, and we're looking at Nation Media Group. Nation Media Group actually is a cross-listed entity, and it also sells stock on the Nairobi Securities Exchange as well. But Nation Media Group is listed on the Uganda Securities Exchange and has been so since October 19th, 2010, and it is traded under the ticker symbol NMG. More information on the International Securities Identification Number can be found on the Uganda Securities Exchange website. But Nation Media Group is actually boasting shares outstanding of 189 million and standing with a market capitalization of 102 billion, which is about 0.49% of the Uganda Securities Exchange equity market. But we're to see more coming in from this entity, and we're looking forward to seeing how it keeps up with the position all the way through the week. But looking into other performers from yesterday, Jubilee Holdings, which is also a cross-listed entity, went up by 0.54%, and that was an appreciation in terms of share price. But let's not forget, it is also a cross-listed equity, and it is a Kenyan insurance company that has been in operation since 1937, and it has been operating only within the East African region. So the company's operations in Uganda were actually revived in 1992 by the formation of the Jubilee Insurance Company of Uganda, together with Aga Khan Fund for Economic Development, International Finance Corporation, and the Development Finance Company of Uganda Limited. Jubilee Insurance Group is one of the leading insurance companies in Uganda, and its reputation precedes it. More information on the International Securities Identification Number can be found on the Uganda Securities Exchange website, but it is traded under the ticker symbol JHL, and we're looking at a market capitalization of 315 billion Ugandan shillings, which is about 1.52% of the Uganda Securities Exchange and of the Uganda Securities Exchange equity market. But we're looking at shares outstanding being 59.9 million. But that is it for the gainers as of yesterday, and let's not fail to highlight the fact that most of them have been cross-listed equities, and we know that this could be a direct effect coming in from the political environment in the neighboring country. But looking onto the losing side, only one equity lost value on the day, and that was Centum Investment, that went down by 0.19%. We need to understand what led to that drastic decline in a matter of hours, but it is also worth looking forward to Centum Investment's performance in today's trading session to see if it will regain its position among the top gainers. MTN Uganda recorded the highest volume of 17,795 traded shares, followed by National Insurance Corporation operation with 900. DFC also showed some movement with a volume of 130, and Airtel Uganda with 50. Now, looking into the market indices, we'd want to go straight forward into the performance of the all share index, and it actually inched up by 1.31, going up about 0.12%. Points to close at about 1055.37. Now, this is representing a 1-week loss of 0.06%, a 4-week loss of 2.41%, but an overall year-to-date gain of 20.96%. Now, the Uganda Securities Exchange Local Company Index also increased by 0.42% and reached 264.51 points. This was making it a 1-week gain of 0.35% and a 4-week loss of 0.01%, and also a year-to-date gain, a year-to-date loss of 2.7%. Now, that is the analysis from yesterday's activity on the Uganda Securities Exchange. We're looking forward to seeing how the stock exchange performs as of today, and how these companies are going to react to the different news and financial events that are yet to go on as the day goes by. But I would want to also look into the Nairobi Securities Exchange to understand how it performed, and also in regards with the political environment currently present within the country, and also how the Nairobi Securities Exchange performance is directly affecting the performance of cross-listed entities on the Uganda Securities Exchange and other companies on the exchange. But we're looking at the most recent trading session, and we're looking at a total of 6,160,200 shares in about 1,166 deals, corresponding to a market value of 72,808,306 Kenyan shillings. And compared with the previous trading session, the data is actually showing 37% decline in volume and 61% decline in turnover, but we're looking at a 15% improvement in deals. So the current market capitalization of the Nairobi Securities Exchange is at 1.77 trillion Kenyan shillings. So in aggregate, we're looking at 49 listed equities participating in the trading, and we ended with 29 gainers as well as 24 losers. Surprisingly, Longhorn Publishers led the gainers with a 10% share price appreciation, closing at 2.31 Kenyan shillings per share. Let's not forget, Longhorn Publishers has actually been in the top losers, in the bottom losers since last week. So we're yet to also understand what led to this performance. But Longhorn Publishers is actually a Kenyan-based public liability publishing company, and the company sells educational and generational books and general books for all educational levels, including preschool, primary, early childhood education, primary, secondary, and tertiary or university. So Longhorn Publishers Limited was incorporated in 1965 and was formerly known as Longhorn Kenya Limited until November 2014. So it was listed on the Nairobi Securities Exchange in May of 2012, and the company has operations in Uganda and Tanzania as well as Rwanda, and its main business in the region is actually the development and publication, marketing and distribution of education and general books. Longhorn Publishers Limited is also listed on the Nairobi Securities Exchange under the ticker symbol LKL, and more information on the International Securities Identification Number can be found on their website as well. But looking at the numbers, we are seeing a 10% increase share price, and closing at about 31 closing at about 2.31 Kenyan shillings per share. Now, in comparison with the previous trading session, we're looking at a 10% gain, and in regards to the beginning of the year, where Longhorn started with 2.41 Kenyan shillings, it has lost 4.15% of that price valuation. This is actually ranking it the 45th on the Nairobi Securities Exchange in terms of year-to-date performance. So shareholders' worries are actually compounded by the fact that Longhorn Publishers has lost 8% of the stock's value from May 24th to date. And Longhorn Publishers is the 38th most traded stock on the Nairobi Securities Exchange over the past 3 months, and it's having a total volume of 299,300 shares in about 119 deals. This is all valued to about 697,747 Kenyan shillings over the period. We're looking at an average of 4,751 traded shares per session, a volume high of 154,200, and this was actually achieved on 20th of the very same period. Now, looking at the next top gainer, we are seeing East African breweries that also showed a share price appreciation of 7.01. East African breweries hasn't been performing on both the Uganda Securities Exchange and the Nairobi Securities Exchange in the previous trading session, so it is worth noting that in just a couple of hours it has shifted to the top gainers. Now, East African breweries is currently at 152.75 Kenyan shillings, and it went up by 7.01%. Followed closely, we're looking at Flame Tree Group Holdings that went up by 6.84%, closing at 1.25 Kenyan shillings. Let's also not forget that we haven't seen performance from Flame Tree Group Holdings in the last 2 trading sessions, so it is worth looking into. But just for context, Flame Tree Group Holdings is actually listed on the Nairobi Securities Exchange under that very ticker symbol FTGH, and more information on its international securities identification number can be found on their website. It is actually boasting a shares outstanding of 178 million, and we're looking at a market capitalization of 223 million Kenyan shillings. Now, the current share price is 1.37 Kenyan shillings, and that was as of the close of the previous trading session. We're looking at a gain of 6.8% in comparison from the previous trading session, and Flame Tree actually began the year with a share price of 1.04 Kenyan shillings and has since gained 20.2% on that price valuation. This is ranking it 15th on the Nairobi Securities Exchange in terms of year-to-date performance. Now, shareholders can actually be optimistic about a Flame Tree Group, knowing that the stock has actually accrued 15% over the past 4-week period, and it is the 7th best on the Nairobi Securities Exchange. Currently, it is the 42nd most traded stock on the Nairobi Securities Exchange, and that has been so over the past 3 months, and it has traded over a total volume of 212,900 shares in 392 deals. This is all valued to about 246,620 Kenyan shillings over the period. This all comes with an average of 3,379 traded shares per session, and a volume high of 36,300 achieved on March 28th of the same period. Now, looking at other gainers, we are seeing BK Group. We saw some movement from BK Group at the end of last week, and currently we're looking at an appreciation of 5.88%. But In other gainers, we're seeing TPSE that went up by 5.71% and closing at 14.80 Kenyan shillings per share. And SGL also went up by 5.52%, closing at 6.88 Kenyan shillings. Now, on the losing side, we are looking at Britam Holdings that came out last with an end of day price depreciation of 9%, closing at 5.46 Kenyan shillings per share. And it was followed closely by East African Portland Cement Company that went down by 7.32%, closing at 5.32 Kenyan shillings per share. Now, East African Portland Cement is actually a Kenyan-based company, and it is obviously engaged in the manufacturing of and selling of cement. It sells the products under the brand name Blue Triangle, and Blue Triangle is used for cementing, mortar, and concrete building applications. So the company also manufactures custom-made cement products for use in construction, as well as precast concrete items such as paving blocks, tiles, building blocks, and pre-stressed concrete components. So East African Portland Cement concrete pavers are actually used in the construction of roads, hydraulic and marine structures, walkways, parking areas, petrol stations, to mention but a few. But it is listed under the ticker symbol PORT or PORT on the Nairobi Securities Exchange, and more information on the International Securities Identification Number can be found on the website as well. But looking into the numbers, we're looking at a shares outstanding of 90 million, and it is boasting a market capitalization of 479 million Kenyan shillings. Now, information from the last trading session shows its share price at 5.32 Kenyan shillings, and in comparison with the previous trading session, we are looking at a 7.3% drop from its previous closing price of 5.74 Kenyan shillings. So East African Portland Cement actually began the year with a share price of 8 Kenyan shillings, but has since lost 33.5% of that price valuation. This is ranking it the 61st on the Nairobi Securities Exchange in terms of year-to-date performance. So shareholders' worries are actually in this case compounded by the fact that the entity has lost 25% of the stock's value from May 24th of that date. So looking into other losers from the Nairobi Securities Exchange, we're looking at Liberty Kenya Holdings that also went down by 7.22%. East African Cables also went down by 6.06%, and we're looking at Kenya Reinsurance Corporation recording the highest volume of 2.52 million traded shares, followed by Safaricom with 2.15 million, KCB Group with 190,000, and Kengen with 167,500. But looking into other bottom losers, we're seeing CGen that went down by 5.75%, closing at 18.85 Kenyan shillings, and SMER with a 2.11 Kenyan shillings per share, showing a drop of 4.95% in terms of share price. But let's go into, we'll be going into a short break, and we'll be right back with analysis from the performance of the various indices on the Nairobi Securities Exchange, as well as more highlights on financial news that is affecting the performance of these entities in the East African financial environment.
Smart 24, driving business.
or like no other. Makes your meal so sweet and scrumptious. The taste of Uganda. Yeah, the taste of Uganda. The taste of Uganda. Yeah, I want ya.
Hello tech lovers, obviously we are back with another tech bite, and this time round guys, technology is getting to a bigger and bigger level. We are going from one phantom to the other. Now this tech bite, I introduced to you what we call the smart glasses. Guys, things are getting out of innovation spaces. You need to be at watch. For example, Mark Zuckerberg has already proclaimed his aim to one day ship a pair of smart glasses that does both, but also still feels several generations away. Can you imagine, guys? Now, Meta has invested over 36 billion in research and development in the metaverse so far, to seemingly little benefit. Now, for comparison, Apple spent just over $150 million in research and development to invent the new iPhone. Can you imagine, ladies and gentlemen? Now, when we ask about whether the 36 billion could have been better spent on researching AI, a Meta spokesperson told Sky News that they spend money on AI and they have been working on AI for over a decade. So I think it's hard to quantify anything in that way. So following Meta's announcement of a new chatbot coming to its Messenger app, the spokesperson said they were confident they were keeping pace in the AI arms race against Microsoft and Google. I think we are just doing different things. That's what he mentioned, and he added that we are pretty comfortable with how we are progressing. Guys, alongside the Quest 3, Meta has also updated its Ray-Ban stories and smart glasses. Ladies and gentlemen, it's getting on fire with AI. These do not project images, but they simply capture them. Now, 2 tiny cameras will be built in the chassis of the pair of Ray-Ban sunglasses, which will record the world around you without you even having to take your phone out. Now, this is interesting. You don't have to take your phone out to record whatever you're recording. Are you live on Instagram? Use those smart glasses to record whatever you want to record. Now, these smart glasses, ladies and gentlemen, they do not project images, but they rather capture them. Now, as I mentioned, the last generation of smart glasses was not a roaring success, with one report published last month saying that 90% of customers stopped using theirs shortly after the purchase. So Meta has come with a very verified version. Now, this will be improved cameras on the Ray-Ban glasses. Microphone chips will be built also on the Ray-Ban glasses. Built-in speakers won't only be just there, but they will also be operating for you to record thoroughly and efficiently. This will be enough to make anyone have an attractive proposition for content creators, those who love to make content. This is an opportunity for you to get yourself the new smart glasses. Now, with the Instagram generation family in mind, the spectacles now only shoot in portrait mode without the option of landscape. As someone who works in traditional TV news, I found it a shame to lose the landscape feature, but the logic behind makes a lot of sense. Now, serial Instagrammers, serial TikTokers will appreciate the changes. Obviously, they will love these glasses, but whether the general public will or not remains to be seen. The built-in speakers situated in the glasses offered good quality music. Oh, ladies and gentlemen, Bluetooth music playback, of course, which also looks at the heavy tracks during your content creation. Now, to me, ladies and gentlemen, this is going to be a very good one for those who love to do content creation, those who love to do live Instagram videos, live TikTok videos. It's an opportunity for you to actually grab yourself the smart glasses. Now, in the world of technology, we bring you the smart glasses. Get yourself a pair and have yourself a very good tech week. Bye-bye.
Called Josephine Arizio. I'm from Ajuman district. I'm one of the participants for this training. I'm in a class of feed mill. What we have learned since the time we came to Good Leisure Farm, we were able to learn about different types of feed mill for poultry. We have been able to learn about feeds for fish and piggery. We were able to also learn about different ingredients like the water weeds, because at first we didn't know it was among the products that we are supposed to mix with our feeds. Then we also have the privilege to have machines like the miller, the mixer, which we can be able, as women, we are able to manage it. They look small in size, but I feel it's manageable to us women. It does not need a lot of energy to work. So we are able to work, to use it, and it's effective. It's like we have the mixer that can mix like 1,000 kilograms of maize per hour, which is like improving our instead of having labor, like employing men to do the work, we were able to do it ourselves as women. I also thank the GROW project.
Is from the Nairobi Securities Exchange, and just to look into other headlines that are affecting the performance of these indices. As of today, we are looking at Uganda Clays trimming its staff and freezing dividends. So Uganda Clays Limited has actually withheld dividend payout, and it has trimmed its payroll by 53 workers and renegotiating its 11.05 billion Ugandan shillings. and we're looking at about $2.96 million loan repayment with its major shareholder, the National Social Security Fund, as the company's cash flow position weakened on falling revenues and rising debt payment costs. So the company's earnings have been hit by stiff competition in the construction and building sector, interruptions in the supply chain due to the ongoing geopolitical tensions in Europe, and operational challenges of the production machinery at the company plants. And all this together has actually resulted into a decline in the production volumes by 15% in 2023. The construction and building materials manufacturing company actually disclosed in its latest annual report that it spent about 136.8 million Ugandan shillings on staff termination, and after 16% of them left in 2023, with 32 employees being from the production department, followed by the management and administration department, and we're looking at 17 and sales distribution department that were 4. Now, with the introduction of new players and massive expansions in the production capabilities of existing players, competition on the roofing sector has been stiffer than ever, and that was according to the company's explanation. But it also added that at least 7 in every 10 households are currently using iron sheets for roofing, and a trend they are trying to reverse by making their products more affordable through incentives like discounts and higher purchases. But the Uganda Securities Exchange, listed firm, which is majority owned by NSSF, that owns about 32% of the company, depends largely on the cash generated from the sales of its manufactured products as part of its daily operations, and it uses short-term financing in its ordinary course of business. This is to manage its cash flows and needs and facilitate purchase of critical spare parts. But in 2023, it actually experienced a significant decrease in positive cash flow from operating activities, and it all actually amounted to about 1.4 billion Ugandan shillings, marking a 73% decline from 2022. Uganda Clay's total revenue declined by 20% to 30.4 billion Ugandan shillings. We're looking at about $8.14 million in 2023 from 36.6 billion Ugandan shillings, which is about $9.74 million in 2022. This actually pushed the company into a loss-making territory. So the company made a net loss of 2.85 billion Ugandan shillings, which is about $763,276 US dollars in 2023, from a net profit of about 2.44 billion Ugandan shillings, and in dollars that would be around 653,471 in 2022. Now, all of this is actually reflecting the effects of a higher reduction in revenue and compared with the direct and indirect costs. So in finance, costs increased by 325% to about 1.8 billion Ugandan shillings in 2023 as a result of the NSSF loan renegotiation to extend the repayment period from 2025 to 2030. Now, this is actually resulting in an estimated interest expense for the period of about 1.6 billion Ugandan shillings. The directors opted not to recommend the declaration of a dividend for the year 2023, compared with a dividend of 0.5 Ugandan shillings per share that shareholders received in 2022. Now, despite facing challenges through the year, we are actually looking at a committed and leveraging environment for the financial capital to navigate economic and uncertainty, and as well as maintaining sustainability. And looking into Uganda Clay's optimistic view and the goals set to tackle this problem, they're actually seeking to position position themselves to capitalize on future opportunities by making strategic investments, implementing cost-cutting efforts, and promoting long-term growth. So this is all supposed to ensure that they are well equipped to propel success in the coming years, and also engage other customers to ensure the best quality is provided to them. So the company also stated that it is looking for external financing, and this is to strengthen its financial position and improve production capacity. But going all the way back to May of 2023, the NSSF board and Uganda Clays signed an addendum to actually to the initial loan contract, which now requires the firm to start repayments on January 2nd, 2025, with 10 equal installments paid semi-annually and interest chargeable at 14% per annum. But the company had been experiencing cash flow challenges, which affected its ability to meet the original repayment terms, hence freezing the interest accrual, and that was according to the company. This is the explanation they had for their shareholders. But Uganda Clays has, however, invested about 7.9 billion Ugandan shillings in its capacity expansion project, and it is supposed to address the aging of its plant and machinery. But hopefully by the end of the year, Uganda Clays would have picked itself up from that turmoil. And in other headlines, we're looking at the South African insurer closing about 3 Kenyan units amid the losses that have been experienced, and it is actually causing a dividend drought. But Sanlam Kenya PLC is in the process of winding up its property, bottled mineral water, and asset management businesses as the insurer struggles to prop up earnings after years of losses and a dividend drought for the shareholders. Now, the insurer, a subsidiary of South Africa's financial services conglomerate Sanlam Limited, says its 3 subsidiaries have remained inactive and the group is in the process of winding them up. Now, we're yet to see more from what happens and how this particular headline is bound to affect Sanlam in Uganda as well. But other wholly owned subsidiaries are dormant and are in the process of being wound up, and these actually include Sanlam Investments Limited, Kemi Semi Mineral Water Companies, and May Properties. The company actually mentioned all this through its latest annual report of 2023. So Sanlam Kenya PLC, which is actually listed on the Nairobi Securities Exchange, is battling a financial crisis largely precipitated by surging finance costs and falling investment returns. So the group's net losses widened by 53% to about 127 million Kenyan shillings, and that was in 2023 from about 83 million Kenyan shillings in 2022, and this was marking the 4th straight loss in a row after reporting a net profit of 114.4 million Kenyan shillings in 2019. So its cumulative losses rose by 14.57% to a 2.28 billion Kenyan shillings from 1.99 billion Kenyan shillings in the same period of 2022, and this was subjecting shareholders to the 10th straight year of dividend drought. The insurer's last dividend was actually in 2013, and it was at 4.5 Kenyan shillings per share, amounting to 434 million Kenyan shillings, as net earnings hit 1.25 billion Kenyan shillings. So last year, the group's life and general insurance businesses recorded a net profit of 534 million Kenyan shillings and 123 million Kenyan shillings respectively. Now, with part of these these earnings being used for the parent company Sanlam Kenya to settle its financial obligations during the year. The group's total loans at December 31st, 2023 stood at 4.65 billion Kenyan shillings, with total finance costs increasing to 604.61 million Kenyan shillings from about 455.34 million Kenyan shillings in 2022. Sanlam Emerging Markets, an intermediate parent company of Sanlam Kenya, actually advanced a loan of 1.08 billion Kenyan shillings to Sanlam General Insurance Limited to bridge the capital shortfall on May 5th, 2022, and the loan has been extended for a further 18 months and will now mature on May 5th of 2025. In addition, the loan agreement between Sanlam General Insurance Limited and Sanlam Emerging Markets Limited provides that payment shall not be commenced or continued if it results in the capital adequacy ratio of the borrower falling below 100%. Now, as of December 31st, 2023, the group also held a credit facility of about around 3 billion Kenyan shillings. And looking back into how the company actually progressed through that year, we had to understand how it is planning to deal with sorting all these outstanding balances. But in other financial news globally that should affect the performance of entities listed on the Uganda Securities Exchange and the Nairobi Securities Exchange, and for those wondering how, it is mainly through the currency valuation. But in our major headlines as of today, we're looking at the European stock features declining as the US tech wobbles, and the markets are actually in a wrap as we speak. But just for context, the Euro Stoxx 50 futures fell while the US contracts edged higher after various US non-tech sectors climbed on Monday. So Nvidia, the chip maker at the heart of the artificial intelligence revolution, extended a 3-day route of about $430 billion, crossing the technical threshold of a correction. So Asian equities advanced with shares in Japan outperforming the region, and investors actually snatched up value stocks, rotating out of the technology sector into other parts of the market. The yen strengthened while the greenback dipped against most of its group of 10 pairs, and the treasuries were little changed during the Asian trading. Now, as we actually approach the quarter end, global investors are rebalancing their portfolio, selling assets and that have performed well recently and buying names that have lagged, said Hanjek Ishiguro, the chief strategist of Nomura Asset Management Company, and that's likely to help support the broader topics index, and that was according to his analysis. But market participants will be also be keeping a keen eye on the France's main political parties, which will hold a debate on Tuesday evening ahead of the first round of legislative elections on Sunday. Spain is scheduled to publish its May producer price index with an ECB speech after which will be later on in the day. Back in Asia, Chinese machinery stock rose after President Xi Jinping urged scientists and researchers to enhance technological innovation with a greater sense of urgency. Meanwhile, actually, speaking at the World Economic Forum, we're looking at Premier Li Qiang warned of negative consequences if nations parted ways economically, while hitting back at criticism that his nation's industrial policy has led to overcapacity. Now, in other news, we're looking at the US is investigating on China Mobile, China Telecom, and China Unicom over the concerns that firms could exploit access to American data through their US cloud and internet businesses by providing it to Beijing. Reuters and Reuters report citing and 3 unidentified people familiar with the matter. But following a tech-led rally, the Deutsche Bank, Binky Chada said, and US equities are set to pause. And there's actually a lot of good news baked into markets. And if that optimism proves unjustified, there could be downside risks. And Lori Calvasina at RBC Capital Markets noted that particular fact. So to John Stolz at the Oppenheimer, while the bull market appears sustainable, some profit taking should be expected. And we're also looking at a decline in tech sector. A decline in tech sector is certainly possible, even if the sector is going to do well during the summer months and overall. So Matt Maley at Miller Tabak noted that even if you agree with the most bullish scenario of the AI phenomenon for the second half of 2024, no group moves in a straight line. And in commodities, oil held gains as investors weighed the potential fallout from rising geopolitical tensions, and gold edged lower after closing higher in the previous session on a weaker US dollar. This has actually boosted the appeal of commodities, and we're looking at copper rising as investors milled prospects for potential stimulus in China following weak fiscal revenue data. Bitcoin also rebounded after falling Monday, and losses are piling up in the crypto market after its second worst weekly decline of 2024. This is a reflection of cooling demand for Bitcoin exchange traded funds and uncertainty over the monetary policy. Now, that has been it for financial news globally and in East Africa. We went through the market analysis for both the Nairobi and the Uganda Securities Exchange. We're here to see how today's trading session goes by, and let's also keep aware and keep a keen eye on these markets, and also understand that they can change at any time. They are highly volatile. The top gainers can be the top losers, and the bottom losers, and the bottom losers can be the top gainers. So it is worth making a well-detailed analysis before you make any move into investment in any sort of financial markets. But that has been it for today. We shall meet tomorrow in another session of market analysis. I have been your host, Victor Chibiru.